The following is a presentation of TFNN. Live at TFNN, The Money Masters. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the October 10th, terrific Thursday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential is what we must master each and every day. So let's begin with some empowering beliefs. These from The Art of War, Sun Tzu. What a great book out there. I love this one. I think you'll love this as well. The first quote, appear weak when you are strong, and strong when you are weak. Just look at the markets and what they do on a continuous basis, folks. Appear weak when you are strong, and strong when you are weak. You know, if you know the enemy and you know yourself, you need not fear the result of 100 battles. If you know yourself but not the enemy, for every victory gained, you will also suffer a defeat. If you know neither the enemy nor yourself, you will succumb in every battle. Folks, you must know how to identify the bulls and the bears. We're going to do that as we take a look at the charts here this morning. But to know your enemy, you must become your enemy. Folks, that means you must look at each side of the trade at all times out there. Strategy without tactics is the slowest route to victory. Tactics without strategy is the noise before defeat. It's a beautiful thing. In the midst of chaos, there is also opportunity. You know what that means, folks? Markets will go in both directions. And the more that folks are in one side of the boat, the more opportunity that presents itself when that chaos appears. Let's go check out the chaos in the markets. Right now, the Dow is up 185 points. It's traded out at 14,988. The S&P is up 22 and a quarter points. Trade at 1678 and change. Composite up nearly 57 points right now. It's trading at 3734. Russell 2000, lead dog in the clubhouse, up 17 points. Trading out at 1060. We got Apple up about $2. Microsoft up 1%, up 34 cents. Intel up 2% this morning, up 44 cents. Priceline up $20 and change. That's up 2%. Netflix up 4.5%, up $12 and change. Antero Res Corp, AR is the ticker symbol, up 20% this morning. That's a nice move out there. That's healthy. AR is the ticker symbol. Antero Resources. Now, it looks like maybe that's an IPO. Okay, so maybe I won't pay attention to that so much. Regenerate Pharmaceuticals, you know, we should take a look at that one. I think that came back and touched the top of the consolidation level that had broken out of. That's up $8 and change. That's up about 3%. Amazon up 2%. Stratasys, SSYS up 6%. Biogen, BIIB up 5.50. Google's up 5.48. Citrix to the downside, leading the charge off 12%, down 8.43. Lindsay Corp, LNN, off 5%. That's off $4 even. Stevens, Sears Holdings, SHLD, off 6.5%, down 380. Quest Diagnostics off about 4%, 246 to the downside. You've got Valmont Industries off about 2%. Our call number, 877-927-6648. Let's start off by taking a look at the indexes, see what we've got forming out here. New York Stock Exchange is what we're going to start with. New York Stock Exchange here. Running into if you take a look at just a really inter channel line here, here's the larger channel lines, what you see on my screen here. That's coming off of the lows back in 2011. Nice rising price channel, the bottom of which has certainly not been pierced for quite some time. If we take a look at just a little bit shorter rising price channel within that area, you just come back to the June 24th lows out here from 2013. That seems to have contained price yesterday. What we have created out here, what it has created itself, is a not just a gap up in a rising window, but a Morningstar pattern out here that says that you should have some pretty good, strong support at the 94.41.66. That is yesterday's low. That's on the New York Stock Exchange. Now, it needs 2,999, I believe, 2,999. Let's just call it 3,000 net advancing issues in order for the bulls to truly take charge of the market. Can't happen today. Right now you've got 2,157 net advancing issues and net declining issues 321. But you can put a big dent in the pretty big dent in the bulls trying to take charge of the marketplace. And inside the VIX, if I switch over to the VIX, if we take a look at that out here, give me a moment, we'll pull up the VIX. That's trading down 12% this morning. That's up $2.37 out here. Where's my VIX S&P 500? Here we go. So the VIX here gapping down this morning now. And I don't trade the VIX itself. It did complete the 1 to 1.272 A to B equals CD. And gaps down this morning now. The question is that really like an island reversal? Again, I don't trade the VIX. I pay attention to the VIX when it's above the 50-day or below the 50-day exponential moving average. I've got both the smooth moving average and the exponential on my screen. That's in the upper portion of the screen if you're watching us on Tiger TV or you're watching us inside the den out here. Reason why I say I don't trade it, and I don't know whether or not really, it qualifies as a island reversal. That's for sure. Because what you did have here is you had a gap up between October 4th and October the 7th, and then we traded higher, completed the A to B equals CD, and then we gapped down here lower this morning. So that's that little island out there. Don't worry about the candle session from October 3rd. You're really basing it off of the October 4th to October 7th, that candle out there. But, in some of these things, some of these indexes and so forth, it really doesn't, I'm not gonna sit here and say that's a true island reversal, not like on an individual equity or stock out there. But the VIX itself, it's got a ways before it gets down to the 50-day exponential moving average is about 14.99. Smooth moving average looks to be about 15.53. It's at 17.25 right now. So volatility not exactly gone here from the market, but making a big dent in it. If we take a look at the S&P 500, let's pull that up. Let's go see. We're going to see all kinds of bullish candle configurations out here. Now, the good news about that is it helps you to identify where the next levels of support are. In this case here, that's the Morningstar pattern we're looking at on the S&P 500. It says yesterday's low, which was the 0.786 retracement, got down to 1646.47 out there. We see the S&P 500 right now back inside that rising price channel, the shorter-term rising price channel, the one coming off of the November lows out there. That is bullish. You got a 9 and 18-day moving average that's on my screen out here. The blue line, that looks like that's the 9 period. The red line is the 18 period. Whenever you have, now that's a lagging indicator, but it's still a good lagging indicator out there, not one that you could trade off of. So, for example, if you did the back testing on moving averages, and I've done them all. If you've done, well, I won't say I've done them all. I've done plenty of them because testing trading strategies is really what it's all about. If you don't have a trading strategy, you're flying blind. Don't even put your money in the market without a trading strategy out there. You need to have trading strategy. And I've gone back and I've taken like your crossovers, 9 crossing the 18. You'd get either long or short depending on which way it is the cross is taking place out there. And thinking that might be a good way to use as a guide to make money. Doesn't work. Doesn't work out there. It's too lagging. That's why you need to be paying attention to other patterns that are out there, whether it's retracements, whether it's A to B equals CD, something that you can put in advance, something that you can look for out there. But a lagging indicator, crossover indicators, trying to make money, doesn't work. As I say, I've tested them. Or if you know one that works, then send me an email, steve@tfnn.com, because I'll go back test it, and we'll see if it does. Because trying to find that, and simplifying trading, that would be a beautiful thing. Nonetheless, it's a lagging indicator, still has that negative crossover bias, but we're watching price. We'll see if it gets back inside the rising price channel. Where is it that the S&P 500 will go from here? If, in fact, all of our worries are over because the folks in Washington are just so good and so smart out there. Well, you can see right now you've done the dead cat bounce, the 0.382 retracement, which is 1678.32. You're at 1677.47 as we speak right now. 1698 would be in the cards for sure. That would be your 0.618 retracement level. We got to remember, inside the S&P, inside all of the indexes out here, we still have we have A to B equals CD patterns, confirmed A to B equals CD patterns, somewhat over the last couple of days with the volume coming out of the market, somewhat suspect. But what we do have is high volume highs out there. Those high volume highs that need to be tested. That would take the S&P 500 into the 1700 would be the low part, 1729 would be the upper portion of that level. That's getting us back into that September 18th time frame. Now, that's on the S&P 500. Let's go. Let's try to take this stuff. Let's go take a look at the composite out here. Let's take a look at two of the strong dogs. And as we take a look at the composite, well, that's a weekly chart. So that weekly chart, again, the weekly chart, all that the weekly chart has shown us thus far, and we have one more day in the trading session, was that the area of support has been tested. And the area of support was, in essence, this bearish engulfing candle from the week of August 30th, the top of that, which is 36.8422. So the move down this week is just testing a support area, making that a pretty strong support level out there. And so that's important to watch. Because other than this week's candle so far, and it's not over, on the composite, it's not a bearish chart at all. It's not even close to a bearish chart in the marketplace. We still got time. Trading got a day in, 5 hours or so? It's all 10:17. So, we've only been trading for half an hour. So we've got a total of, about 12 and a half hours worth of trading. So we'll see where things end. But let's take a look at the daily chart. The daily chart out here, let me switch over to it. Where did it go? Window, vertical. Put up the daily out here. So if you take a look at the daily chart of the composite NASDAQ composite right now is trading up 54 points, up 1 4/10% out there. And it's got a little rising window, bull separating line. So even though that candle might not look real bullish to you, it's really a very bullish candle signal out here. Take a look at where it closed yesterday and gapping up. So we got the bullish signal. That says the bear sash candle, that would say that support's going to be your low of yesterday, 3650.03. That's on the composite. Let's go take a look at the NDX 100. Let's go see what the NDX is doing right now. The NDX is up a total of 43 points, up 1 3/10% up here. Really the same candle signal out here, a little rising window. That really sets up, in the case here, with it being a rising window, sets up the support level really being the bottom of, or the top of yesterday, which would be 3161.76. And we'll go take a look at Apple and Google, a couple of stocks inside the NDX. Let's go take a look at the Dow. We haven't taken a look at the Dow Jones yet. We'll take a look at both the Dow Jones Industrials as well as the Transportation Index. If the Dow closes above 14,938.04, you've got a confirmed change in trend on the daily chart. We know we've seen a change in trend on the intraday chart. We went through all that detail on the first show at 9 o'clock this morning. I don't want to go through all that again and bore you unless I've just simply run out of time or what have you. So we're waiting for the market to pull back and test the area where it broke out from to confirm that it is a real break here. But today, close about 14,938.04. Then that says, if you take a look at where is it the Dow could trade to, well, got to remember you got that high volume high on September 18th. So 15,709.58 to 15,470 is absolutely game out there, totally game out there. Right now, the first move inside the Dow would take you up to the dead cat bounce, the 0.382 retracement, 15,097. And then the next level, sweet old 618, 15,331. Dow's up 182 points right now. Be back in just a few.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with TAS Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to TAS Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a 3-fold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow up 183, S&P up 22 right now. So we were looking at the Dow before we went to break. Nice big Morningstar reversal pattern out here, and very, very strong, very powerful as we speak right now. As you take a look at today's candle over, and this is a 3-day reversal signal, so overtaking that candle from October the 8th out there. And we'll go take a look at the volume on the ETF structure in a few minutes. And that says that support here is, again, the low of yesterday's candle, which is 14,719. Look, folks, when you trade, whatever you're doing, make sure you are always using stops. You got to have stops in place. Look, I can show you. I probably can go back here. Let me find a Morningstar pattern inside the Dow that maybe failed out here. See if I can find one. Here, I can find one right here. Let me blow this up on the screen. And this is why you want to make sure that you're using stops. So we have I'm taking a look at the Dow. I'm coming back to the time frame. So we can see the Dow is in a downtrend. I'm looking at the October 5th, 2012 time frame. The Dow was up at the 13,661 level. You can see it moved all the way down to, looks like a low on October 25th at about 13,039. So 13,039 to 13,568. So you got a 500-point move or so, right? Now, that's not where the actual reversal came from. These 3 sessions right here. Candle session of November 2nd, November 5th. You can see a nice little small-bodied candle out here, primarily below the body of the November 2nd candle, and a nice big up-thrusting candle right here on November the 6th. And that very next trading session, I don't remember what was going on back then, November 7th, but you can see that that area was taken out. So that's where you would have a stop. It would be just below the Morningstar pattern out there. You know, if you're going to try to attack these markets to the upside, just make sure you have a stop in place, because in this case here, the Dow itself went all the way down into the lows, important lows on November 16th when it made a key reversal session out here. That was also a reversal pattern, and that set up a nice big anchor low, which we use right now in order to be able to take a look at the rising price channel in place. Now, the Dow here, you know, what it wants to do, that's the rising price channel we're looking at. So it really wants to get up and test that rising price channel, which will also simultaneously, for the most part, be testing the September 18th low out there. So whether that takes place, you know, today, it's not going to make that type of run today. Whether or not we've seen the reversal today, or we're going to see some jostling around here for the next couple of days, you still got a high volume high out there, and that's really what wants to occur. That's what wants to get tested out there inside the market. I mentioned the transportation index, so the Dow Jones Transportation Index. I've got a chart on that somewhere, so let's go take a look at that and see what it is doing. My guess is we're going to just simply see Morningstars in most of these indexes out here. We'll take a look at the SOX too, because that's important. So where's the here we go. Here's the transports. Right down here. Yeah, that's got also a Morningstar reversal candle as we speak right now. So that's giving you and in this case here, you know, also a buy signal. Now, I know I meant a buy signal so long as it closes above 65.49.11 out there. So a lot of trading opportunities that backed off to the 0.618 level. Did that day yesterday. That area held, was coming into a little gap. It closed a little bit below that window. So we won't take a look at that. But the retracement so far this morning, the transportations looks very strong here. It is already above the 0.382 level. So the transportation index, to the extent that you use it, is telling you that it really wants to get to, I say not just 66.19, but 66.79. And if it closes back above the May 22nd high, that is 6562.85, it'd be back in the upper part of its range. Right now that's held as a bit of a resistance area, but that's what you want to be looking at there. I did mention the SOX index, so let's go take a look at the SOX, see what that is doing. The reason why is because, you know, this thing here, this SOX has just not done anything to the downside, or what it's done has been so small. A little rising window today. This is not a Morningstar pattern. This body, this candle, too big out there. Nonetheless, gapping up and trying to get above in the very upper part of the consolidation level, which is a 43-point move out in the marketplace, and that's where they close above 493.20. The SOX should go ahead and take off. Now, let's go take a look at Intel. Let's go see what Intel is doing. That is one of the top 3 holdings inside of the SOX. So let's go take a look at the core stocks out here, Intel being one of them. Intel is up this morning about, about 2%, I believe. So let's go check in on that, see what it is doing. Intel here has been traveling in this little rising price channel. Yesterday hit the bottom of that level, and big volume in it so far. This thing here backed off yesterday with 139 million shares. It's got 97 million shares in an hour of trading. Whoosh! This thing made a high out here with 273 million shares. That was back on June the 6th. But Intel is exploding this morning off of the bottom of that rising price channel. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at Nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow is up 183 right now. S&P is up 21. My mistake on that Intel chart that we were looking at, I had a weekly chart up on the screen, not a daily chart. So let's go back to the daily chart. My apologies for that. Intel did gap up this morning, and it's still up with some good volume out here. Volume of 12 million shares so far. That's after making a low out there with 36 million shares. Only been trading for an hour, so it's got some nice volume. Could be on its way up to form an A to B equals CD up. The B point on this was going to be September 19th. The volume up there only 28 million shares. So it should be able to take that out. Now, what it's got to deal with here is a little bit of a resistance level, which is this downdraft candle session from July 17th. It was July 18th, actually, that had that downdraft. That had 77 million shares. So could run into some turbulence as it gets up into that B point. One thing at a time on Intel. Let's take a look at some of these other equities here in this core area. ExxonMobil struggling this morning. It is down just a tad. It's trading at 85.06, closed yesterday at 85.16, so down 9 or 10 pennies, not a big deal. What it's doing, though, it's testing that 7-point consolidation level. It has come into that area with light volume. And by light volume, I'm going back and I'm taking a look at the swing point, the last swing point out here, which was April 17th. That had 17 million shares. Yesterday you were down with 13 million shares out there. So it's got light volume as it comes back and it tests this consolidation area. Haven't seen a bullish sign. That's not the most positive thing to be looking at on the screen out here as we take a look at Exxon Mobil. But still holding, still maintaining that consolidation level. Speaking of consolidation levels, IBM has jumped back into the consolidation area. It's now back above that long-term 30-point consolidation area. That would signal that the break to the downside was a false break. Back up there, that could send price all the way back up to the top of the rising price channel out here. So today, gapped up, and it's done 866,000 shares. Volume on the way down, 5.5 million shares on October the 8th out there. Let's go to Baton Rouge, Louisiana. Let's go to Frank. Frank, thanks for calling. Thanks for holding. How are you this morning?
I'm doing fine, Steve. Thanks for taking my call. I'm also taking your course for the 6-week you did for the Master Trader program. I'm trying to finish it up late in getting the course started. But I have a question about J.P. Morgan.
Sure.
I have some puts that are expiring in 2 weeks. I'm about even on them right now. Would you bail, or do you think it's going to go back down?
Well, so let's take a look at, so you're 2 weeks out. Let's take a look at J.P. Morgan this morning here. It's gapped up, that candle formation, because it's coming in a downtrend. If it were to finish like that, that would be considered a hammer candle on this. It's got pretty good support, which has already proven itself to us with the candle session. What I would be looking at, Frank, is September the 25th area. So that low, that bullish engulfing candle, the low there was $50.06. So what it's doing here this morning, so that's a good support level. Hasn't been able to break that area. And we can see that range has been tested a number of times. There was this little high wave candle that and gap down, almost a island reversal on the way up, but it appears that it was not. But the candle session from June 24th is real key, and that had volume of 30 million shares. So it came down and tested with 18 million on August 28th. Then came back and tested, created that bullish engulfing candle with 39 million. So that's 39 going against 30. Still not able to bust it down. And then yesterday, down with only 24 million shares. So it's got some resistance here. Here's how I would take a look at it, or you determine whether you want to take a look at it this way. It's in a real narrow banded trading range right now. And I would say I would bail. Well, first let's take a look at what it's coming into. So the swing point, its most recent swing point, is from October 4th, and it has 17 million shares, Frank. And so today, so far, it's up with 5 million shares. So it looks like it's coming into that swing point with volume. Hasn't touched it yet, the low of which is 52.01. If it closes inside 52.01, there's no reason for it to not at least test the high of that. And you can see that what it's dealing with at that stage, I kind of benchmark it against that little downdraft volume from September 23rd to 28 million shares, which really isn't that much. In fact, today it's looking like it's going to come into that level. But it still is a resistance area that hasn't proven itself to you. But if you get above that area, meaning the 52.80-ish range, then this thing may want to run to a higher price. And if we just take a look at normal retracement levels here from now, the financial sector itself is really the weakest sector out there. It's given the strongest sell signal. Because on the XLF, on the weekly chart, it's got a big old island reversal, abandoned baby top doji. So, but J.P. Morgan does, what I can tell you is this much, Frank, is that it has held the support level in that $50.06 range. So if your target level on your puts was below that, it doesn't look like it's going to be able to bust through that area.
So you're leaning toward probably just bailing?
Yeah, there's, if you're in a break-even type trade out here, it's moving up today with some good volume behind it. I mean, it's got some resistance areas. I guess how I would take a look at it is, since you're fresh today, here's how I would view or answer the question. Would you get in the trade today, knowing that you've got really good support at $50.06? And I don't know the answer to that. But it's for J.P. Morgan to break below $50.06, it's going to need something really, really negative to occur. And if your answer is,
its earnings are coming out, the next day or two, also.
Yeah.
I was wondering how that would impact it, possibly on the downside.
that I don't know. Do you recall? Do you know when the last earnings release was? But it's kind of tough to. I would play the chart patterns versus necessarily the earnings release. I would take a look at, hey, where is identified support inside a stock chart, and so just kind of put the earnings off to the side, and then make the decision and say, would I take the trade now, knowing what I know now, which is that this support level is really strong. That doesn't mean it can't break it, but it does tell us that the way that it's been tested, that there's bulls out here. I don't know if it's J.P. Morgan themselves that are buying the stock. I don't know who's buying it, but they are defending the price of 50.06 with a vengeance out there. And so
that bullish engulfing was pretty strong too. That large bullish engulfing candle was very strong.
Yeah, and it had big volume there. So the test, you can say, really took place yesterday, because it came back yesterday with only 24 million shares going against 39 million shares. It's even telling you that it's really lost the energy down there. So I would just look at it as, fresh trade. If you cleaned off the charts and you said, hey, I clearly know where my support is it worth the risk to take the trade? Because there's no reason, since it couldn't bust it down, now the question becomes, will it bust it up? And it's got some resistance for sure, up at the 54-ish level, 53.87 or so. It's got to clear, really two hurdles, because this thing gapped down. So, taking a look at the resistance areas, as we've identified the bullish areas, resistance areas on this are pretty clear as well. And the one that looks like it's been tested is, we took a look at the first one, but the second one, Frank, is the August 14th low, which is $54. So at $54, and that had a gap down of 16 million shares. It wasn't exactly on a ton of volume. Still, nonetheless, it was a gap, and it held as resistance as price moved back up there on September 10th, 20 million shares. I think there's probably better reward-risk trades out there for you than this one.
Okay. And if you could look at UNG real quick, I'm a fairly positive trade on that.
Great. Okay. Love to hear that.
I'm hoping it'll, continue this. I have 3 weeks left on an option call, 17 in the money.
Okay. So what I would be doing, Frank, here is I would absolutely be focused on the December contract for natural gas. So if you don't get that data feed and you're trading the UNG and you're trading options, you should find a way to get that data feed and pay attention to that chart. And what I would do here, and do me a favor, also send me an email, and I'll send you a copy of these charts so that you've got them, so that you can use them as a reference point. And what I would do with the December contract here is I would be paying it. Now, you've gotten a nice breakout, so it's done what it's supposed to do to the upside. And natural gas over the longer term, or I don't know what the time period is, it's saying that it wants to go make a move up to $4.20. And it broke that rise. It broke the descending price channel, which is what you wanted to see. Now, the cool thing is that this thing came down and tested a support level. So when we were taking a look at J.P. Morgan, this really did the same thing and had that nice support from that hammer candle from September 26th. And the low there was $3.62. And it tested that area nicely and off to the race at this stage. It's running into some resistance, some natural resistance out here, which is the red diagonal line on my screen, which is the trend line. I wouldn't get out of the trade or anything because of that, but it's just good to know where is it that you're looking for resistance, because what you want to see is a close above that. I wouldn't be surprised to see natural gas, maybe test the bottom of this descending price channel one more time before it takes off. You've had 2 tests now, 2 successful tests out there. So if it does it a third time, all that's doing is giving you a little bit more energy that it wants to move to the upside. For UNG itself, as we take a look at UNG now, and its price pattern out here, this really, to a certain extent, has to be traded off of the natural gas contract. But what it's doing today, you've got UNG trading into the swing point of September 19th. That had 5.4 million shares. You're up into it today with 2.3 million shares. So this looks very strong because you're coming up into a swing point with volume. If this closes inside the low of that swing, which is 1929. You're at 1930 right now. What that says is it'll at least go test the 1998 level. If it takes out 1998, what it's really doing is setting up the A to B equals CD. As we looked at the A to B equals CD pattern inside the natural gas contract, inside UNG, it would be saying, give me a moment here to pull it over, probably like 2119, 2120 would be its move. But as far as a time frame on it, I don't know if you've got that kind of time frame on it.
Oh, yeah, no, I just have 3 weeks. But if natural gas hits 4, would you kind of be looking at maybe cashing out?
What I would do is, depending on if it gets to 420, I would be watching for how price is moving. If you got the natural gas contract, how price is moving along the C to D leg. Because if it stays on the left-hand side, what it's doing, it's telling you it's really strong. Now, at that stage, you've got some other type of decision to make out there. But I would be watching here. So if it's coming in with a wide-ranging bar, it's coming in with volume, and it's traveling on the left-hand side of the chart, it's telling you it wants to get up to $4.35 out there.
Okay.
But you've got to deal with the time element of it as well.
Okay.
You know, and so that makes the managing the trade just a tad more difficult. I can tell you what the stock chart is doing. But the problem with the types of tools that we use, it doesn't really give me a time sequence.
Okay. And
the other thing. Go ahead.
Go ahead. I was going to ask you, do you think the overall mood of the market is now shifting back positive if today's activity reflects a potential debt ceiling improvement, that we're going to shift from what was on the bearish side?
What I want to be able to see is I want to be able to see what happens as the market works off the overbought exuberance out there. That's, to me, is the real key. You know, as you know from the newsletter and the momentum strategies that I share with you guys, I took a long position last night. Now, I came out of that long position and hit my target. The question I get most often, it seems like from folks, this is maybe a little divergence from your question, is, when to exit. And to me, it's always when you got into the trade, what was your target? And has anything changed? And as price was moving up into my target line this morning, nothing had changed. So now, what I want to be able to see on the ES Mini is I want to see it come back and test the trend line and test the channel line that it broke out of. I'd like to be able to see the same thing inside of the Dow from an intraday standpoint. I'm looking at the charts out here. But, if we get a close inside the Dow today above, I gave you that number, it's confirming a buy above 14,938.05. That's confirming a buy signal out there inside the S&P 500. If it closes above, which it is right now, 1682.04, it's back inside the channel out there. You still, no matter what, you got to use money management strategies. So we've seen the change in trend signals coming. They first came from the currency pair, which is where I expect it to come from. The currency pairs are always going to be able to lead. And that Euro, Japanese yen, there is no better currency pair, in my opinion, for tracking what's going on inside the U.S. market. And so this thing now, this is confirmed that it has broken out. And so I want to watch how this pulls back. But to me, it's really about the pullback out there as far as and I want to see it come back and test the channel lines that it broke out of, reject those, and then it's off to the races.
Okay.
All righty. But send me you bet. Thanks so much for subscribing and going to the Master Trader course. And please send me an email. I'll send you some charts, and then you get back in touch with me either by phone, email, if you've got any other questions. Okay.
Okay. Thank you.
All right. You have a great day, Frank. Right now, we've got the Dow is up 207, S&P is up 25. We'll be right back.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
TFNN has just announced a special sale for 2 weeks only for the Gold Report. To celebrate the 600th weekly issue of Tom O'Brien's Gold Report being published on October 22nd, TFNN is having a special one-time sale. From now until October 22nd only, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, which is almost half off the regular monthly price. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. Take advantage of this one-time special offer and pay only $600 for 60 weeks of the Gold Report. This offer is valid for current or new subscribers. Everyone is welcome to take part in this special promotion as we celebrate the 600th weekly issue of the Gold Report. All the details are on the front page of TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve. Yet, you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Dow's up 208, S&P up 25 points right now, Composite up 63. New York Stock Exchange, let me peek in on that, 2,128 net advancing issues. So the bulls having a nice day. The New York Stock Exchange up 1.4% out here. And, the questions that Frank asked about the market, is it getting ready to turn? It's a question that everyone has out here. And, I think that some of the best tools to be able to use, let's first start off by taking a look at what has been the trend of the marketplace since the October 19th, September 19th. We're not even, it's only October 10th. The September 19th high that took place out here. Now it's a 120-minute chart. I'm going to switch back to, I think I could switch back to the 30-minute chart here, and we've got the same channel lines. Okay. And as we take a look at this, now, as we take a look at the, so first let's answer that question. Clearly, when we take a look at the channel line, you can see the downtrend. Now, the first time that price got above that downtrend was back here on about 12:30 in the afternoon on October the 4th. Price breaks above it. Never came back to test that area. Well, it did come back to test it. It was called October 6th. Came back and tested it, gap back down inside. When it gets back down inside the price channel, if it can't bust it out to the top side, what does it do? It goes and it revisits the downside, which it did here coming into 5 o'clock on October the 8th, and then yesterday morning at about 11:30 as well, 12 noon, it went ahead and tested the bottom of that price channel. Now what it's effectively done, it certainly has broken the trend, and it seems to be breaking it with some pretty good conviction. I mean, if you take a look at the volume during the trading session from 9:30 to 10, you had 300,000 contracts. Now, what we can also see, it's the middle section of my screen. That's a relative strength indicator over a 14-bar period out here. You can see it's in the extreme, overbought, just exuberant area. If I pull this thing back here, the last time that it was that exuberant or close was really right after Uncle Ben Bernanke. Now, came out with the FOMC meetings. Now, if I pull this back here on the 30-minute chart, and when it gets up to those levels, it's actually dangerous. When you're bullish, you're kind of like, really? Is that what you're going to do? Is that what you're really going to do? Because what happens is the next push higher in price can set up a divergent pattern out there. You want to see it just kind of have normal breathing patterns, not these exuberant breathing patterns out here. In this case, you had the RSI getting up to the 14 period, getting up to a level of 85 back here, coming in at 3 o'clock time frame of the FOMC meeting. And then what's it do? It makes a higher high back at about 7 o'clock in the morning and on September the 19th. And the relative strength was down 75.55. You had the divergence between price, between relative strength. You had the bearish candle. And that, quite frankly, at this stage has set up the high of the market that we're in. That set up certainly the downtrend channel that we're in. So don't chase it up here. Wait to see how this market works off its oversold condition. Does it have to come back and test this? No. The downtrend channel that I'm talking about. But should it? Yes. And is that going to be the better place to give you a piece of information as to whether or not this break was real or was this break not real? And all it's going to do is come back and test the bottom of the descending price channel out there. I personally will feel much better when I watch how this overbought condition gets worked off. And from a bullish standpoint, I'd love nothing more than to be able to be a bull here. But really, that's what you're going to do. You're going to take the RSI reading up into the 81-ish level, back off, and then maybe make another high on a lower relative strength indicator index, and then give me a divergent price RSI pattern. That's not what we really wanted to see this morning. That wasn't what we really wanted to see this morning. But I say be patient. Pay attention to the Dow. Look, folks, you don't have to trade the futures, but all price is doing for 24 hours a day, almost 24 hours a day, is really helping us to understand where things really want to go to. So go out there, get access to the futures contract, learn these channel lines. Be like Frank. You can still sign up for my Master Trader course. If you want an education, folks, that is an education. Just call the folks at TFNN. They'll be happy to sign you up. Stay tuned. Basil Chapman is up next. Have a terrific Thursday. Look forward to seeing you in the morning, folks.
Are you ready to ride the next bull market wave? Catch the Chapman Wave. Using the Chapman Wave methodology, Basil's very comprehensive daily newsletter, The Opening Call, gives the short, intermediate, long-term analysis for the key indexes. In his Trader's Corner, he gives a brief market summary and expectation for the day with possible trades, both long and short, which are reviewed daily. A position subscribers sold recently for a 42% on part, plus a 64% on rest. At Hertz Global, as a core position for 6 months before exiting the position. A current position, entered as a turnaround company with good technicals based on Basil's waveform, is trading up to 170% of its entry point as a portion sold earlier for a 21% gain. Subscribers to the Opening Call can see the Chapman Wave techniques demonstrated and explained daily to educate investors. To get your 2-week free trial to the Opening Call, just visit the front page of TFNN.com. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday at 11 a.m. Eastern on TFNN.